understand what the stock market is.
Hey everyone, welcome back to part 2 where I am with Pete Komolafe. Part 1 we covered off investment applications, what's hot in 2021, and part 2 I'm really excited because this is something that is across social media and the news everywhere, and we're going to be talking meme stock millionaires. Is it true? Is it false? What do we need to know? And the audience watching, are you involved in meme stocks? I'm sure some people are.
Yeah.
So there is a lot of hype at the moment. I would be lying, I know we had a conversation off camera, but I did originally early on put some money into AMC and I withdrew on a profit. I'm out, but I know a lot of people that are still in. But when it comes to meme stocks, what's it all about? What's happening right now?
It's one of those situations where none of the normal principles of like investing apply in any way, shape or form. Fundamentals don't stack up. Like just the business trajectory does not stack up, and it's purely just driven off like human emotion, psychology, fear of missing out, people just lumping into these, obviously fueled by the fact that the smart money, as we call it, are doing things that really are questionable, to say the least, in terms of their practices. And I guess this really again goes back to why it is great that these apps are available now, because the retail investor can actually take a stance and be like, actually, you know what? That makes no sense why you're shorting 120% of the stocks of a company. Like, how can you do that? We're going to take the opposite end. But I think we get to a point where there has to be a reckoning. And I don't know when that reckoning is going to be just yet. It's particularly when it comes to AMC and GME. I mean, I've done a couple of day trades on AMC and done okay out of that, but it's one of the situations where now, because it is so big and there's so much hype, people are just piling in, not necessarily understanding any of those fundamentals. And yes, they don't apply, but at the end of the day, somebody wins, somebody's also got to lose.
Yeah.
And the question is, are you going to be a winner or a loser? If you get in at $60, are you taking too much of a risk here?
It's normally the retail investor that loses. Like big institutions, when do they ever really lose? Like when it comes to it.
Exactly. I mean, this is the thing. You know, institutional investors will hedge their positions. So it's like they're not just doing that one thing. They're hedging their positions in different ways. And there's so many things that they can do when it comes to options to hedge that position and make sure that, okay, even if this position goes down, I've got to hedge the opposite way, which means I'm still making money. Retail investors aren't fully aware, in my opinion, of all of those things. Yes, a small portion, a section of them are, but the majority of them aren't. So whilst you're thinking, right, I'm going to screw over this hedge fund and really squeeze this price, well, guess what? They're probably doing exactly the same thing that you're doing to hedge their position, because we know one thing for sure, they don't like losing money. So they will do everything that they can to protect that position. Yeah. So, I mean, it's very, very clever people, flaws of analysts. And I always say to people that, you know, when you're investing, you need to question whether you have the ability to have access to the kind of information that these big boys have. A lot of the time you don't.
You're normally too late. Like people who have made the money, one thing that I've learned working with bigger institutions and family offices is they make their money early. And then when it hits the news and everyone else tries to jump, that's the retail. That's when the retail investors jump the bandwagon. Something for all the audience, whoever's watching, we won't talk about this now, but I would seriously go and research painting the tape, where that is manipulation. It's essentially, I buy from Pete, he's an institution, I'm an institution, retail investors are here. I buy from you, you sell to me, I buy back, and we bump this price up and then we sell when the retail investors go, oh my God, this price is going up, and we dump and we get out and we've made a lot of money.
This is the thing, it's a game of chess. Yeah. So that kind of stuff does happen because they're like, okay, there's enough hype around this, the retail investors come in. They've got their target, they've got their stop loss. So the minute it goes there, boom, and what you then see is a huge volume go out, and then the share price, and then retail investors are kind of left holding the bag, if you will. And, you know, people may think that that's unethical, but that's how the markets have always operated. That's how these guys make money. They are professionals at that. Their job is to seek these kind of opportunities out on the stock market. Yeah. You know, they've been doing it for years.
So for anyone watching, 30-second overview. What is a meme stock really? What is it in a nutshell?
Well, so a meme stock is kind of just a stock that has been of interest over a period of time for whatever reason. So there's Reddit now, there are Discord groups that are pumping these kind of stocks, and it's typically a stock that really, the fundamentals behind the business doesn't really work. Relatively low volume, low float, so you can easily pump interest into this and increase the share price over a relatively short period of time and realize a profit. Really, that's the premise behind a meme stock.
Yeah, and one thing you need to look into as well is a lot of these meme stocks that are blowing, a lot of the businesses were dying, a lot of the fundamentals that you would normally look into when you handpick a stock, they're gone. It's just a case of the retail investor wants to go against the grain, push the institutions and the hedge funds out, and it's a bit of a battle. So that's basically what it is, so well explained. So going into that, people have become millionaires overnight. That's the truth. People have become millionaires, and that brings in a lot of FOMO. But if someone is looking at a meme stock early on, what would your recommendation be that, look, if someone's watching now and they're like, I'm going into it, I've seen Naked, I've seen AMC, I'm convinced it's going into it, just what fundamentals would you say, okay, have a chat with yourself, what would you recommend?
I think first and foremost, you have to absolutely recognize that you do not control the future. Because they're saying Naked is going to be the next one doesn't mean it is going to be the next one. But I think fundamentally, if you are of the persuasion that you want to absolutely get involved, then please do not go and take out a personal loan. And I've had this, take out a personal loan to go and invest in this one thing, because we don't know what the outcomes are going to be. So obviously just look, understand that it's a 50-50 probability really at the end of the day. It might go, it might not go. Ultimately, you could lose money, you could make money. You're probably going to be in a position where you'll probably lose money if you don't know what you're doing. I always say that investing is about stacking the odds in your favor. You try to mitigate your risk as much as possible, not take too much risk. You try to make sure that you're comfortable with it. And that would be the thing that I would say to people. Try to understand what it is that you're doing. Understand that you are taking a risk. Don't overextend yourself on the amounts that you put in. Put in the amount that you can afford. Comfortably afford, and that doesn't mean dipping into your emergency fund and throwing that in either. It's like, don't leave yourself overexposed, and just understand this is a game of probability. You could be right, you could be wrong. You have to be ready for the fact that you will be wrong, because what happens typically, and what I've observed over the last year, is people, when it comes to money, are irrational and illogical. They're thinking about, if it goes 100x, I'm a millionaire. They're already buying that Lamborghini, buying that house and all that kind of stuff, not thinking, actually, I could lose everything that I put in. And they don't quite realize it until they actually have the money into this. Because I remember I had a coaching call with somebody this year, actually. He messaged me off YouTube. He goes, I've got 40K cash. I'm thinking of putting it all on Tesla. And I was like, why? He goes, because I just think that Tesla's going to be great. I'm like, okay, like just take a step back a little bit, mate. Let's zoom out. What's the situation? He's got family. He's got a son. Okay, right. So 40K, where did this 40K come from? He bought a crashed Tesla, fixed it, sold it. That was his profit. He goes, I understand how Teslas work. I'm like, okay, but what about the business? The cars are fine. The car's one thing. I drive a Tesla. They're fantastic. The car's one thing. The business is a completely different thing. And I said, you feel as though you're going to be happy to put 40K into Tesla right now, but it's a very volatile stock. If you see it drop 10% tomorrow and you lose 4K, I guarantee you right now, whilst you're saying you're happy for it to happen, you will absolutely freak out. In the end, he kept some money aside for emergency fund, because I was like, look, you've got a kid, right? So make sure that you cover your bills, make sure you're going to be okay. But he put money in anyway. And he messaged me like 2 weeks later. He was like, I freaked out. Because at that point, the share price did tail off a little bit. And he goes, nah, I thought I was going to be okay with it, but I wasn't. And that's just the reality.
Scary.
Loss aversion is real.
It is scary, and that's the thing. Like, people just forget about the fundamentals. What I find scary is, I did a video on this recently, is where you get your resources from. Like, if you're thinking about investing into a meme stock, or you're going to hand pick, where are you actually getting your information from? You need to firstly question yourself, like, am I in the know? Like, is this something I've been doing for years? Have I been on Wall Street? Have I been in the New York Stock Exchange? Or am I just reading posts off of Reddit which constantly contradict each other every hour? And just to sort of give an example is if you are watching YouTube, yes, it's a great resource to learn, but if you put in AMC, someone's telling you you're going to be a millionaire, the other person two hours later is saying that it's going to crash. So be really mindful. But on AMC, it's everywhere at the moment. What's your forecast for AMC?
I don't have one, purely because I don't see where the volume is going to come from to push it into the $500, $200, $300 mark that people are talking about. I just don't see it. And I think at some point, I mean, I think it's around about $60 right now. Yeah. It can't sustain that level. I just don't think it will, certainly from a fundamentals point of view. Long term, it will be incredible if it did. So I think at some point it's got to trail back down to probably about $20, $30. I could be completely wrong though. I could be completely wrong, but I just don't see there being enough volume or interest to push it to the numbers that people are thinking that it's going to go to. I just don't see it. And this is where, you know, speculation and FOMO and all of this stuff on social media is so dangerous, because you need to have your own opinion. I say it all the time on my channel. Like, yeah, people watch me. Yes, I'm a qualified person in the industry. I've been around for a while in the industry. I'm trying to share as much knowledge as I can. I feel like I'm the party pooper, because I'm the one who's being like, listen, if you do this, you're going to lose money. And I try and keep it real. And I always say to people, right, you can listen to me, but don't just listen to me. You need another person's opinion. You need your opinion, Aaron. You need somebody else's opinion. So at least you can take all of that together, do your own research, and then think, actually, I think maybe that guy's right, but actually I disagree on this level, but this guy also had made a valid point. You can at least form your own opinion that you base your decisions off. But I just don't see MC going to the $200, $300, $500 mark that people are talking about. I don't know where it will go.
I don't. Let's be bold. I would go as far as to say I can't see it breaking $90. I've said that kind of from the off. I would see it struggle to break $90. That's my prediction. I'm throwing it out there. But with meme stocks, you've just said it really, is that you've got to know where you're getting your information from. And also, I would, you know, slightly off track, but we're staying within the meme stocks, is look at who your circle of knowledge is. Because if you're surrounding yourself with people who have never invested before, they've just opened up an account, they're really excited, they're enthusiastic about a meme stock, and if you're listening to them and they have no experience in investing, that's majorly concerning.
This is the one thing about YouTube and social media in general when we talk about stock market finances that just really drives me nuts. Like, there are people who are learning to invest, making videos about investing on YouTube. That's all very well and good, that's fine, but you need to take it with a pinch of salt. There are accountants talking about investing. It's like, I'm not an accountant. I don't know about your tax return, so I wouldn't go onto YouTube and make a video about your tax return and how you save money on tax. There are just so many different variations of people and experiences on YouTube spouting so much absolute nonsense sometimes that I despair, and I'm like, okay, so if I didn't know anything, who do I listen to? Who do I pick? Who's the reputable source here? And that, it scares me, because because people act on things that they hear on YouTube. And as much as I try to say people to say, look, I don't show my investment portfolio for that one reason. I don't want anybody to copy my investment portfolio just because, oh, Pete did that, so I'm going to do that. I don't do that. Yeah. And I think it's a minefield at the moment.
I do exactly the same. I never show value. I never show exactly what I've got or what I'm doing. I'm totally aligned with you. So that is amazing. So really, you know, if you are going to invest into meme stocks, research, learn about it, be really smart, and only invest, we've said it before on my channel, dead money. You know, be very aware of your personal circumstances. Brilliant. We're going to wrap that up for part 2. Stick around, join us on part 3, because it's going to be incredible. We're going to be talking about crypto and its fatal future. So join us in part 3.